Hi, my name's Tom Elliott, Director of Beulah Capital. With me is Christian Ryan, the CEO, and welcome to the March quarter financial markets update. Christian.
Thanks, Tom. Look, firstly, to kick off, there's been plenty of news and interest in what's been happening with the banks and the Royal Commission. Can you talk a little bit about the implications for that and for investors? You know, it's been a hot topic that's been in the market for the last couple of weeks.
Well, the Royal Commission has caught a lot of people by surprise. The banks and firms like AMP have come out of it, and it's not finished yet, looking very, very bad. What is interesting, it's not so much on the lending side where they're all coming unstuck. It's financial planning, wealth management, insurance sales, that sort of thing. Now, thus far at AMP, it's claimed the scalps of both the CEO and the chairwoman, Elizabeth Brenner. And AMP's got an update to the market coming up in a few days, so that'll be very interesting. National Australia Bank has announced it's going to sell its MLC arm. So I think the most likely outcome of all this is that the banks will gradually divest themselves of their financial planning, wealth management arms, because it's just a business they have managed terribly. And frankly, that's good for independent advice firms.
Do you think the politicians have got it right in this commission?
Well, the politicians got it wrong. There's no doubt in the coalition side, they resisted a banking royal commission for a long time. Now, belatedly, they're all saying, oh, yes, it's terrible and more. There need to be more scalps. What it's doing interestingly politically, though, is Scott Morrison is desperate to try and get through a company tax cut. But politically, that looks terrible at the moment because people are saying, well, if the banks have behaved so badly, why would you give them a tax cut? And the answer is, there is no good answer to that.
Probably on the positive side, though, Tom, there seems to be plenty of announcements at the moment on infrastructure spending, and finally the Australian dollar is retreating to a bit more of a lower level for Australian investors.
Yeah, no doubt. We've had in Victoria the state budget a week ago. We've got the federal budget coming up shortly, but it's been well flagged in advance that both state and federal governments around Australia want to spend a lot of money on infrastructure, and why not? I mean, infrastructure in this country has lagged well behind population growth for quite some time, and it's very good for infrastructure-related stocks. So building stocks, for example, also companies like Transurban, which manage toll roads, are going to do very, very well out of this. As to the dollar, of course, falling, I mean, that's actually fantastic for Australia. It's always terrible if you're planning a trip overseas, but it's been one of the reasons that the mining sector has been doing so well lately because, lower A dollar means higher revenue for them, so it's good news. Now, what about the risks and opportunities, Christian? What are you seeing?
Oh, look, we've recently conducted our formal quarterly review with the team, and look, the biggest risk we're seeing from a global perspective is around rising interest rates and the trade wars that are going on around the world. And I think interest rates is probably the biggest one. Countries and economies are growing, reasonably well. So the biggest risk we find is whether the cost of capital or rising interest rates happen too quickly. If they get out of control, then that puts extreme pressure on equity markets in particular, valuations and share prices.
Yeah. It's interesting, Philip Lowe, the Governor of the Reserve Bank, said a few weeks ago that the next move in Australian official rates will definitely be up. And he said when it happens, it will probably come as a shock. That means it will come out of the blue. Now, he's the bloke who, along with the rest of the board, does set the official rate of interest. And the other thing I noted just a few days ago is that the US unemployment rate has slid to 3.9%. It's the lowest in a generation. And you cannot keep low interest rates at a time when you've got pretty much everybody who wants a job getting a job in the world's biggest economy.
So we don't have problems with rising interest rates. We just don't want them to rise too quickly and get out of control. Look, and from an investment theme point of view, with assets that have been growing high over the last number of years, I still think our biggest opportunity for investors is investing overseas in emerging markets, and in particularly with investments that have a focus on technology. Technology is changing the shape of business in the world, and there's plenty of great opportunities through China, Asia, India, those emerging market economies that are really growing at a much faster rate than the developed world. So that's sort of an area that we're still continue to add more and more money for investors overseas. And probably just to finish, Tom, probably I suppose this little point on is anything catching your eye at the moment that you think is quite interesting for investors to look at?
Well, yeah, there's a couple of interesting takeovers on at the moment. We haven't seen much merger activity in the Australian market for quite a while, and of course we do have a takeover target portfolio. Two reasonable sized bids right now. Santos, the oil company. Now, it's had a bid from an overseas company called Harbour. It probably undervalues the business, but there are some Foreign Investment Review Board implications there because it's a foreign company buying a big piece of Australian gas and oil infrastructure. And the other one is a cancer treatment company called Certex, which has had a very up and down history. But Certex had one bid on the table, and now a mystery Chinese bidder has emerged. So this is always a good sign for the health of the share market.
Probably for me, Tom, I think for the first time we're starting to see, which has been happening in America a lot, is activist type of investing or companies and positions people that are starting to try and change and influence boards. So two things that caught my, like extreme number of obviously class actions that are coming out now against the banks and various companies, and boards have to respond to that. And secondly, which has been a hot topic of the last sort of month or so, is blue sky alternative investments with the US short seller Glaucus certainly producing extensive research paper about whether that particular business is doing what they say they were doing. But anyway, we'll see in the long term what happens with all of them.
We will. All right, that's wrapped it up for this quarter. Thanks very much for your company, and we'll talk to you again very soon.